Today, inshallah, we are going to start the course of financial accounting, the principles of financial accounting, أساسيات ومبادئ المحاسبة المالية. What is accounting? In the first slide in our chapter 1, we have to define the accounting. What is the definition of accounting? Accounting consists of three basic activities: identifying, recording, and communicating. Identified what? Identifying the transactions and recording these transactions in some documented such as general ledger, general journal, and communicates how to communicate or transfer the information to the external users based on the financial statements, the economic events of an organization to interested users. We have three activities as you can see in this slide: identification, select economic events, which is called transactions, and number two, recording, how to record or classify and summarize, and finally how to prepare the accounting reports to be able to convey or transfer the useful information and reliable information to the external users who are using this information to be able to evaluate and assess the financial situation of the organization. As we can see also, the accounting process includes the bookkeeping function. Who uses accounting data? We have a number of parties can use accounting data. First of all, internal users. As you can see, internal users in very simple words, managers at all levels in the organization. المديرين في كافة قطاعات المنشأة. المديرون في كافة قطاعات المنشأة such as marketing managers, human resources managers, finance managers. All managers at all levels in the organization need information about accounting, need financial accounting data, need accounting data to be able to make a number of decisions related to each department inside the organization. And also external users, also they need information about accounting data, such as investors and creditors and some governmental agencies. They are already using accounting data to evaluate also and assess the financial situation of the organization. Also, a number of parties can use accounting data like final consumers or customers. As we can see, question number 1, ethics are the standards of conduct by which one's actions are judged as right or wrong, honest or dishonest, fair or not fair. The right answer is all of these options. Generally accepted accounting principles. These rules very important to follow when preparing a number of financial statements. As we can see, the accounting profession has attempted to develop a set of standards that are generally accepted and universally practiced. These rules are known generally accepted accounting principles, which is abbreviated GAAP. when preparing financial statement such as balance sheet, income statement, statement of stockholders' equity, statement of cash flows, we have to prepare such statements based on general rules and general regulations. These rules are called generally accepted accounting principles. We have three forms of business ownership. Number one, proprietorship. Number two, partnership. Number three, corporation. Number one, proprietorship. This kind of ownership generally owned by one person, and the owner receives any profits, suffers any losses, and is personally liable for all debts. Second form of business ownership is partnership, owned by two or more persons, generally unlimited personal liability and partnership agreement. The third form of business ownership is corporation. Corporation ownership divided into shares of stock and limited liability. Combining the activities of Kellogg and General Mills would violate the economic entity assumption. A business organized as a separate legal entity under state law having ownership divided into shares of stock is a corporation. The right answer number C, corporation, because the ownership divided into shares of stock. Now we are going to explain the basic accounting equation: assets equal liabilities plus stockholders' equity. Assets, that is our resources, which have future expected benefits to the organization, and the liabilities is the claims or obligations, and stockholders' equity, that is the stockholders' equity which contains the common stock and retained earnings. As we can see, this basic accounting equation we have to understand in the beginning of accounting course, because the left side, all amount of the left side should equal the all amounts on the right side. Assets, as we can see, the definition of assets as we already mentioned in our lectures. Assets, resources a business owns. Assets provide future services or benefits. We have a number of assets, some examples of assets such as cash, supplies, equipment, accounts receivable, and a number of assets in the organization. Liabilities, this kind of liabilities is called claims against assets, debts, and obligations. Creditors, accounts payable, notes payable. These examples are most important examples of liabilities or obligations against assets. Stockholders' equity, ownership claim on total assets, referred to as residual equity, common stock and retained earnings. common stock اللي هو أسهم رأس المال and retained earnings اللي هي الأرباح المحتجزة. As we can see, investment by stockholders and revenue increase stockholders' equity. But on the other hand, dividends to stockholders and expenses decrease stockholders' equity. As we can see, more explanation about we already introduced in our lecture. We have 4 kinds of equity. 2 items increase equity and 2 items decrease equity. Which items increase equity? Investment by stockholders increase equity. Revenue increase equity. But we have 2 items decrease stockholders' equity. These 2 items are dividends to stockholders and expenses. So stockholders' equity have 4 items. 2 items increase it and 2 items decrease it. Which items increase stockholders' equity? Investment by stockholders and revenue. And which items decrease equity? Dividends to stockholders and expenses. Dividends, what is the definition of dividends? Dividends are the distribution of cash or other assets to stockholders. Dividends reduce retained earnings. However, dividends are not an expense. Dividends are not expense. Expenses are the cost of assets consumed or services used in the process of earning revenue. Common expenses are salaries expense, rent expense, utilities expense, and also tax expense. All of these examples are common examples of expenses. Now we have a number of items. We can classify these items into issuance of stock or dividends or revenue or expense. As we can see, rent expense is an expense. What is the effect on equity? Decrease. Service revenue, it is a revenue. What is the effect on equity? Increase. Dividends is an equity. What is the effect on equity? Decrease. Salaries and wages expense is an expense. What is the effect on equity? Decrease. As we can see, all expenses decrease equity, all revenue increase equity, and the dividends also decrease the stockholders' equity. We are going now to see the effect of some transactions on the accounting equation. What is the definition of transactions? Transactions are a business economic events recorded by accountants. These transactions may be external or internal. And not all activities represent transactions. Each transaction has a dual effect on the accounting equation. What is the dual effect on the accounting equation? Any transaction has 2 effects. One effect on assets and one effect on the liabilities or owner's equity. And maybe also the transaction may be effect on one side, maybe effect on assets, or maybe effect also in the right side under liabilities or stockholders' equity. Illustration. Are the following events recorded in the accounting records? We have event, we have criterion, is the financial position of the company changed, and record or don't record. For example, purchase computer, yes, because it is a transaction and we can see what is the effect of purchasing computer on accounting equation. Discuss product design with potential customer, it is not a transaction. Pay rent is a transaction. So pay rent and purchase computer are transactions and can affect on the accounting equation. But just discuss product design with the potential customer is not transaction, so it is no journal entry for this transaction, for this process when we design the journal. Using the accounting equation, as we can see now, assets equal liabilities plus stockholders equity. Stockholders equity contains common stock أسهم رأس المال plus retained earnings الأرباح المحتجزة. retained earnings الأرباح المحتجزة عبارة عن revenue minus expenses minus dividends. Revenue minus expenses minus dividends. Now we can see transaction analysis. We see a number of transactions and what is the effect of each transaction on accounting equation. What is the impact of each transaction on accounting equation? But remember that خلي بالك من حاجة، أي عملية هتؤثر على معادلة الميزانية لابد بعد كل عملية أن يحدث توازن بين طرفي المعادلة. لابد أن يحدث توازن بين طرفي المعادلة. The total amount of assets should equal the total amount of liabilities and stockholders equity after each transaction. We can see now the transaction number 1, investment by stockholders. Ray and Barbara Neal decides to open a computer programming service which he names SoftBite on September 1, 2015. They invest 15,000 cash in exchange for common stock. In this transaction, 15,000 cash increase on the left side, one kind of asset increase, and in the same time, common stock in the right side increase also by the same amount. What is the definition of this transaction? Issued stock. Issued stock. Issued stock. The 15,000 cash increase. In the same time, common stock increase also by the same amount, 15,000. Transaction number 2, purchase of equipment for cash. SoftBite purchase computer equipment for 7,000 cash. In this transaction, cash decrease and in the same time one asset also increase. Which asset increase? Equipment. And which asset decrease? Cash. So the two accounts affect this transaction in only one side of the accounting equation, on the left side under assets. One asset increase equipment and one asset decrease cash. One asset increase equipment and one asset decrease cash by the same amount, $7,000. Transaction number 3, purchase of supplies on credit. What is the meaning of on credit? The meaning of on credit, it is on account. SoftBite purchase for 1,600 from ASME Supply Company computer paper and other supplies expected to last several months. This transaction is called purchase on credit. Any purchase on credit will create accounts payable. Accounts payable, that is one kind of liability accounts payable, that is one kind of liability, as we can see here in transaction number 3, one asset increase and in the same time one liability increase. Which asset increase? Supplies. And which liability increase? Also accounts payable. So the increasing amount on the left side, increasing amount of the, so supplies increase by 1,600 and the accounts payable also increase by 1,600. Transaction number 4, services provided for cash. SoftByte receives 1,200 cash from customers for programming services it has already provided. These transactions affect on assets and affect also on the stockholders' equity. One asset increase under one asset increase. Which asset increase? Cash by 1,200. And which asset decrease? In this transaction, no asset decrease. One of stockholders' equity revenue increase by 1,200. So increasing on the left side 1,200 equal the same amount increasing on the right side under revenue 1,200. Transaction number 5, purchase of advertising on credit. SoftByte receives a bill for 250 from the Daily News for advertising but postpone payment until a later date. We purchase of advertising on credit one kind of expense, but this kind of expense not cash, expense on credit. So in this transaction, accounts payable increased by 250 and in the same time stockholders' equity decreased represented by expense. يعني accounts payable زادت ب 250 أو $250 and in the same time stockholders decrease قلت متمثلة في الاكسبنسز. نقولها كده، نقول إن الستوك هولدرز إكويتي قلت أو انخفضت متمثلة في الاكسبنسز في المصروفات. Transaction number 6, service provided for cash and credit. In this transaction we have compound transaction. 3 items will be affected. 3 items will be affected or 3 accounts will be affected. 2 accounts under assets and 1 account under stockholders equity. SoftByte provides 3,500 of programming services for customers. The company receives cash of 1,500 from customers and it bills the balance of 2,000 on account. So cash increased by 1,500, accounts receivable increased by 2,000, and on the right side the revenue increased by 3,500. Remember that. خلي بالك من حاجة أو تذكر الجزئية دي مهمة جدا. The total amount of left side should equal the total amount of right side to keep the balance between two sides in the equation. The total amount of left side should equal the total amount of right side to keep the balance between the two sides of equation. Transaction number 7. Transaction number 7. the expenses. Payment of expenses. SoftBite pays the following expenses in cash for September. Store rent 600, salaries and wages of employees 900, and utilities 200. These three kinds of expenses. The expenses, as we can see and also we mentioned before, all expenses decrease stockholders' equity, and all expenses already happened by cash. In this transaction, 1,700 decrease cash and 1,700 decrease stockholders' equity under expenses. All expenses decrease stockholders' equity. All expenses decrease stockholders' equity. Transaction number 8, payment of accounts payable. SoftBite pays its $250 daily news bill in cash. In this transaction, one of liabilities increase, one of liabilities decrease, and in the same time cash also decrease. So assets decrease by 250 under cash, and the liability also decrease under accounts payable. Transaction number 9, receipt of cash on account. SoftBite receives 600 in cash from customers who had been billed for services in transaction number 6. In this transaction, I received 600 from customers. 600 already cash increase and 600 decrease under accounts receivable. Dividends. The corporation pays a dividend of 1,300. As we can already see and mentioned before that, dividends is not an expense, but dividends decrease stockholders' equity. And I paid dividends cash, so cash decreased by 1,300, and in the same time dividends decrease stockholders' equity by 1,300. After all these 10 transactions, the total amount of left side should equal the total amount of right side. The total amount of left side under assets equals the total amount of right side under liabilities and stockholders' equity. Financial statements. We have in the company 4 financial statements. 4 financial statements. Income statement, retained earnings statement, balance sheet, which is called the statement of financial position, and the statement of cash flows. The question, we have question now. Net income will result during a time period when net income when revenue exceed expenses. The right answer number D. You can see now income statement. The income statement only has revenue minus expenses. The revenue minus total expenses equal net income. Net income 2,750 will be transferred directly to the next statement, which is called retained earnings statement. We can add 2,750 to the retained earnings beginning minus dividends equal in the final amount retained earnings ending 1,450. This amount should be transferred to the balance sheet or statement of financial position. Statement of financial position, as you can see, the statement of financial positions, assets, liabilities, and stockholders' equity, and the total amount of assets such as cash, accounts receivable, supplies, equipment. The total amount 18,050 should equal the total amount of liabilities and stockholders' equity 18,050. In the balance sheet, the total amount of assets should equal the total amount of liabilities and stockholders' equity. Income statement reports the profitability of the company's operations over a specific period of time, lists revenue minus expenses, shows net income or net loss. Retained earnings statement reports the changes in retained earnings, الأرباح المحتجزة for a specific period of time. The time period is the same as that covered by the income statement. Balance sheet, as already we mentioned, includes assets, liabilities, and owners' equity. The statement of cash flows. The statement of cash flows includes three items. Cash from operating activities, cash from investing activities, cash from financing activities. What is the question now? Which of the following financial statements is prepared as a specific date balance sheet at a point in time?